Hey guys, so welcome to another day. And today I'm going to be looking into some of the assets that might be in alignment with our trading strategy. If you've never been on this channel before, welcome. And this isn't a channel to give you financial advice. It's just my own personal perspective on what the market might be like in the near future. And it's primarily to educate everyone on how to utilize this specific tool that I'm using. So the strategy consists of a three-way system. And those are, I'm just going to list them right here. We have the COT, which stands for commitment of traders. We have the seasonality. Then we have the probability. And what the COT primarily is a way to monitor what the commercials are doing. Commercials are people that utilize these specific assets for their normal day-to-day transactions. So if an organization needs Chinese yuan, for example, they have to purchase that, and they're not looking to make money off the fluctuation of the market. They're looking to make money on the products that they produce itself or whatever services they produce themselves. So we tend to follow those guys because they seem to be slightly ahead of the market because they have to do so much research and have certain information within their organization or certain department within their organization specialized for this purpose only. And seasonality is just basically it's the season of the market. Every single asset has a season. There's 4 quarters in the year, and here in the UK we have 4 different type of season. We have winter, autumn, spring, summer. You know, and the market also has its own season. So we utilize if we see an alignment from the COT and the seasonality, then there's a high probability that that trade will come into play. Hence why the third one is called probability, which is the percentage of win on a specific date itself. And it's more like a casino type of indicator, which shows you what's the percentage of a specific asset being in a specific direction, on a specific date. So let's move to today's analysis. Now, in today's analysis, I've gone through the COT report already, and I've filtered out some of the trades, that I think might be applicable. So first off, we got gold looking like a long. So this is what a COT report looks like. If you haven't seen it before, this is basically what it looks like. Long, we have long and short. Long simply means going up, buy. Short means to sell. And what we do is we look at the changes, right? If there are changes, if they're adding more position to their long side or to their short side. So in this case, for example, we've seen people taking out position from their short side of gold and adding it to their long side. And some of the other assets is Swiss franc, which is showing that they're taking up position from the long and adding to the short side, and Japanese yen, just like gold, adding more to the long side. We go euro, adding more to the long side, and NZD, we have it adding to the short side, but you still have some on the long as well. So I tend to just want to clean, just add in one direction. So for NZD, I'm just going to delete that off. Now let's look at gold. Let's start off with gold. Now we know that with gold, right, we have, just gonna type it up. You might not be able to see what I'm typing for now. Bear with me. So we have gold and we have that going long. And we have CHF, we have that going short. Then we have JPY going long and Euro going long. So just write that down. JPY long. Euro is also long. Now, what we're going to look at is we're going to look at seasonality and see which of the assets align with what we're expecting. So I'm just going to reshare my screen. So we have gold, and today's date is the 29th. This webinar was meant to be recorded yesterday, but I was out, so I couldn't do it. So we're at somewhere around, we're somewhere around here in gold right now. And we're expecting gold to start moving long around the 7th. So If we look at gold, gold is already showing long, and we're already right here somewhere around. Let me just zoom in. So we're somewhere around here at the moment. And this is where we are. So because we're expecting gold to go long, you know, from what we can see right here, it doesn't really look that way from the 29. I mean, it looks like some of it will go long. And the way to utilize this tool is simply this. You want all three to be aligned. So we have the 5 years, 15, and the 47 years, right? We want all three to be aligned, pointing towards the same direction. So let me give you an example. If we have all three aligned, like let's say during this period, for example, then the chances of that trade coming in play is higher, when they're going short. But right now we have something like uh, we have yeah, so we have this going on right here. The price is right here. The 47 years seems to have a dip. The 5 years seems to be going long. The 15 years seems to be going long. And we like the trade to be something like this. Give us a decent amount of time, not just 1 or 2 days straight, like maybe a whole month, a week minimum, you know. So for gold one, because it's not fully aligned, we're gonna delete that and we're not gonna take the trade, right? We need all three of them aligned. And now the main reason for this is we want to only take trades that we know we have the highest percentage of win. And we don't want to take trades that, we might feel like it might not win over time. So it's a little bit of something we have to think about. Apologies, I don't know why Alo just came on. Just a moment. Apologies for that, guys. So what we want to do now is we want to look at into every other asset and see which one is in alignment with the COT report that we had earlier. Now, if we get a good alignment with that, then we'll be able to then take that trade. It's taking a while to get the screen off, so bear with me. So, all right, so let's go back to the screen. So we have that. Now we have the CHF next to check, and we expect on CHF to go short. I can actually close all of this at this point. So we check the next one online, which is CHF. And we want to see if we would get that alignment on the CHF. So CHF, we are right around, 20. And because we're expecting CHF to go short, what we're seeing here is we only have like 2, 3 days of short. I don't normally take trades like that because, as I said earlier, I wanted to have at least a good amount of stretch. So for that reason, I'm going to also take CHF out of the equation. Next is JPY. All right. See JPY. And we're expecting JPY to go long. So we're right here again. And JPY looks like we might have a long, but it's going to be a little bit of a struggle from, it looks like from the first, we might have it going long, but in overall terms, it should go long to about the 12th, but you might have a pullback. Now, this will be a little bit choppy, and I don't like choppy markets, so I like it clean. I don't have to trade every single time. I only have to trade when I have an alignment. So if I don't have an alignment to my strategy, I just let it go. So next thing we'll look at is Euro. Now, we expect the Euro to also go long, and this is where we are. So if we look at this looks more better. So from the first, we see Euro going long up until the 7th, I'm guessing. Yeah. So we have euro going long. So in the seasonality, we have euro long first till 7th June. Right? Now you might be wondering, why am I just looking at just one? We have to look at a whole pair, like a pair, right? Now, if I know where one is going, the likelihood of getting the other's direction right is super high. So what I'm gonna do is I'm gonna look at the probability tool and I'll look into every single euro probability that's available to me, right? So, right, I'm just gonna load all of them up. I think they're about 7. All right. And basically what we want to look at is we want to look at which one has the biggest alignment for us, and then we'll take that trade. So we have Euro CHF first. Now we're expecting Euro to go long from the 1st of June. So what we'll do is we'll look here and we want 3 days moving in our direction. So June says 1st of June says buy, says sell, or second says buy, and then we'll go Saturday, Sunday, and then we have the sell. So for that reason, we're gonna cut Euro CHF off because we need all 3 days to show us buy. Right. That's what I found out that works best. Now, if you look at Euro JPY, look at that. We have buy here, buy, and then on the 7th we have that sell. So our first trade for today will be Euro JPY with that long 1st till 6th. All right. So that's the first one. And next, let's look at Euro USD. So we have 50-50, where we have a buy, we have sell, we have buy, we have sell. We don't want that. Remember, we need 3 days going in our favor, right? And there's a reason to that. The reason is if one day flops, the next day is most likely not going to flop. If the next day flops, the day after that will flop, which will bring you all the way back into profit. I mean, from my experience, that's what I've noticed anyway. So on this, Euro AED also doesn't look like it's going to go our way. It's going short. So take that out. Then the next thing is, yeah, Euro GBP also is just 50-50. So we're not really taking that. And if you're asking how do we get this percentage, it's just an in-house tool that we built ourselves. So yeah, that's what it's about. So the next one is Euro CAD. Euro CAD looks good. We got that long 1st to 6th. So the same thing as Euro JPY. Okay. Then we have Euro NZD. And then we have the 50-50, and that doesn't work. So from the overall look of the trades we've looked at so far, we have 2 trades, Euro JPY and Euro CAD. Now, if you want to learn how to use the tool, you can visit our website at business.dmempire.co.uk/pricing. And don't forget to, like and subscribe if you learned something valuable in this, in this session. So I'm just going to put it there /pricing. That's where you get access to this tool. And if you need more help, feel free to leave a comment and I'll be able to respond to you. So thank you guys for tuning in, and I'll catch you in the next one. Take care.